So this is part 4 of chapter 23, and here we're going to just take a closer look at our fixed factory overhead variance and try to understand what this is really telling us. So first of all, we went through the mechanics in the last lecture, and we ended up with a unfavorable $3,200 fixed factory overhead or volume variance. Unfavorable. So that's obviously a bad thing. And we ended up with that based on the fact that we had a budgeted normal capacity factory or fixed factory overhead cost of $35,200, and we compared that to our standard fixed factory overhead cost based upon our actual production of $32,000, and the difference, of course, is the $3,200 of unfavorable variance. So let's take a look at what that means. First of all, let's just make the assumption right off the bat that the $35,200, just so there's no confusion, let's just assume that that is the actual fixed factory overhead that we incurred for the period. So the first thing, if you think about the cost of each unit that's produced, the more units that are produced, the lower the cost of each unit from a fixed factory overhead point of view. So that $35,200, if that was spread over one unit, that one unit would cost $35,200. If that $35,200 were spread over 35,200 units, the cost would be $1 per unit. So clearly, the more units that are produced, the cheaper the units are going to be. And that's what we're trying to determine. We're trying to determine, did we produce more or less than what we budgeted? And if so, then did that result in a positive or a negative, favorable or unfavorable variance? So in this case, when we prepared the budget and arrived at our $4 predetermined rate, and I'm looking off to the left, we had factory overhead of $35,200, and the assumption was our activity base was going to be 8,800 direct labor hours. Now, if you remember, each unit required 4 direct labor hours. So the assumption here was that we were going to produce 2,200 units. So that was our assumption, and that's how we built our budget. And that's how we arrived at the $4 that we're going to apply overhead at. So we assumed we were going to produce 2,200 units. How many units did we actually produce? Well, we actually produced only 2,000 units. So if you think about that, we produced less than what we anticipated. Therefore, the $35,200 would be spread over fewer units, and therefore the units, those 2,000 units we actually produced, are going to be more expensive. Okay? So if we actually produced 2,200 units, if we go back over to the left, if we actually produced 2,200 units, each would take 4 hours. We'd allocate $4 per direct labor hour, and we would have allocated 35,200. So if things would have went according to budget and we produced exactly 2,200 units, then each unit would have cost us $16 of fixed factory overhead. And again, that's $16. That makes sense because each unit requires 4 direct labor hours, and each direct labor hour is a $4 standard cost, and therefore that's $16. So each unit, $16 cost. Okay? Unfortunately, what happened was, when we actually produced only 2,000 units, we still had the $35,200 cost, but now we only had 2,000 units. And remember, all costs have to be absorbed by all the products. This is absorption costing. So there can't be any leftover costs. All the costs have to be included in all of the products. So those 2,000 units now have to bear that full $35,200 cost. And it just turns out that if we divide that, then each unit now, instead of costing $16 because we produce fewer units, those units are going to cost $17.60 of fixed factory overhead. So they're more expensive. In fact, they're $1.60 more expensive. So if you look at it, so the variance is $1.60 more expensive or unfavorable. Each unit, we produce 2,000 units, and therefore the total variance is $3,200 unfavorable. And that is, in fact, the same as the variance we calculated. So that's really all that we're doing. We're really, by using this technique, we're quantifying how much more expensive are those units in total. Now you could just take the 3,200 and divide by 2,000 units, and you'd figure out that each unit is $1.60 more expensive. So you could easily calculate that. But that's all that this is doing. It's just determining how much more expensive are those units. So the problem is that what we were doing was we were allocating $4 per direct labor hour, but that was assuming we were going to incur 8,800 hours, and then that would fully absorb the $35,200. But at $4 a unit, $4 an hour, we only absorb $32,000 in our products. There's still an extra $3,200 left over. That has to also be absorbed into our products. So it has to go back in, and that's why that $4 rate is not enough to get all of those costs into our products. So that has to come in at a higher rate. And so all we're really doing is just quantifying what that higher amount would be. And in total, it would be $3,200 or $1.60 per unit higher. Or if you did it on an hourly basis, this would need to be $4.40 to fully absorb all $35,200 into our products. So that's the problem, is that the $4 is not enough. We didn't produce enough units. We underproduced. We underproduced by 200 units. We only did 2,000 versus 2,200. Because we underproduced, they were more expensive per unit because fixed costs get spread over fewer units. And in total, the amount is $3,200 per unit. Each unit is $1.60 more expensive. So hopefully that helps explain it. But it is a little bit confusing as to how this works. But I think if you come back to the idea of fixed costs have to be absorbed by all the products, and the fewer you make, obviously the more expensive they're going to be. And all this is attempting to do is to quantify in total what that additional cost is going to be. Now, if you overproduced, if you produce more, so if instead of 2,000 we produce, say, 2,400, then we would have had a favorable variance because the products would have actually cost less per unit. So then we would have ended up just with the opposite situation that we have here. And you can put in some different numbers and try that to show how that works if you want. So anyway, hopefully that's helpful.